Let's get fresh reaction now from Chris Toomey of Morgan Stanley Private Wealth. It's good to have you back.
Thanks for having me.
Have you been thinking at all about the government shutdown? I don't really feel like the market has at all. It's been so overwhelmed and consumed with the AI trade.
Yeah, I think it's been consumed by the AI trade, and now it's digesting it. And so I think if you think about it, equity markets are up probably 30 to 40% since Liberation Day. If you look at some of the main drivers for this, the higher beta, higher vol stocks have all done exceptionally well. And we had a really big October, particularly in that. So I think you're starting to see some people taking some profits. I think there's a little bit of concern with regards to Powell, 100% expectation with regards to Fed cut in December. It's still 2/3. But I think if you have that kind of run, everyone just expects this is going to continue, and you get a little bump in the road, people are going to start to pull back a little bit on risk.
I mean, I hear you, but the labor market data, at least we're not getting government data, but the Challenger numbers we got this week were concerning. Despite what Powell says about it's far from certain or far from it or whatever, their hand may be forced to cut rates. I think that's put a little bit of a floor under stocks too.
Absolutely. No, and I think that's something to think about with regards to once we get through this kind of settling, what are going to be the things to drive it next? I think Fed policy is definitely going to be a part of it. We also haven't talked about fiscal policy, the big, beautiful bill starting to flow into the economy. The other thing is M&A activity up over 40% year over year. IPOs coming into market, so you're going to get those animal spirits. Plus, you're going to start to see people chasing for that year end, doing a little bit of window dressing on the active side, managers wanting to show that they own the stocks that have done well. Yeah. So you'll start chasing that, as well as just trying to kind of just catch up with the FOMO trade. So we think going into the end of the year, maybe you still get a little bit more of a pullback here, but we should finish pretty strong.
Did anything fundamentally change this week in your mind about the AI trade?
Not necessarily. I think, look, earnings in general, which I think are the major driver of this, they were, 2 times over what they would normally be for beats. And if you look at what's driving this, earnings look really good, and demand is still relatively strong. I think when we start to see supply catching up to demand, I think that's where we start to get worried. I think everyone's starting to make the comparisons with regards to the 90s and now. You look back then, tech was probably trading at 60 times. We're at about 30 times right now, at twice the return on investment. I think a good kind of comparison is Cisco versus NVIDIA. Cisco is trading at about 100 times with mid-teens growth. NVIDIA trading at probably about 30 times with almost 80% revenue growth. So I don't necessarily think we're there. I think history is going to repeat it, though. At some point, we're going to overinvest.
But we do that on everything every time.
But I don't think it's now. I don't think right now is the time where you start to see this pull back. I still think we've got room to run.
So then you lean into that trade still. It's like the Paul Tudor Jones thing of 2 weeks or so ago, where it's like, yeah, if is it a bubble? If it walks like a duck and talks like a duck, it's probably not a chicken, right? That's what he said. And he said you have no choice but to get in on this trade, even if it's going to end badly. You're just going to have some dancing feet and happy feet to get out.
Right, because I think the AI transformation is going to happen. So I think the key beneficiaries are going to be these bigger companies that have great cash flow. I think the other opportunity that you can look into is the build out on the infrastructure side. You look at an area like energy, it's up only about 5 or 6%, trades at a very good multiple. We haven't really seen that infrastructure move into the energy side like the way that you've seen in utilities, which are up about 20%. So if we really have to double capacity in the coming year, not just for AI, but also onshoring and nearshoring, I think you're going to start to have to see that also do well.
What's your favorite part of the market right now?
I mean, our favorite part of the market, honestly, is probably on the private side. That infrastructure trade, as well as looking at some of these smaller companies that aren't necessarily public yet. If you look at what's happening, I think it used to be that they had a term called unicorns. If you were a company, private company that was over $1 billion, you were a unicorn. You didn't exist. You were a magical thing because you went public.
And now it's become $1 trillion.
Right. Well, I mean,
we're getting there. Well, at least one of them.
Yeah, somebody's getting a $1 trillion payday. But there's over 1,500 private companies now that are unicorns. And so getting access to that part of the market, I think, is a key part of what is going to do well in the coming years.